Welcome back to the Pleb Underground. Signal without the slop. All right, let's dive into it. We've got messed up yesterday, right? I was supposed to tell you guys about a cool story about Lightning Liquidity, and I screwed that up. So it's going to be the first thing we're going to cover. Next, got an announcement out of the UAE. It looks like a major real estate developer is going to start accepting Bitcoin payments, and we can cheer that on. You guys know we're going to do a paper Bitcoin summer update. Now, normally we're just talking about companies that are starting to accumulate Bitcoin. Maybe in some cases they're buying MicroStrategy shares. The tone of one of the articles we're going to look at today is kind of changing. It's kind of unsurprising to me, but still changing. And, we got to pay attention to the overall tone of the space and the way that mainstream media is either loving or hating the Bitcoin treasury companies. And finally, we're going to take a look at the rise of ARK protocol. There was some really cool stuff that happened at Baltic Honey Badger, the Baltic Honey Badger conference. It's a Bitcoin conference out in Riga. Probably one of the very few Bitcoin conferences that I'd like to actually go to. One day, I hope to attend Baltic Honey Badger in Riga. But yeah, they did something really cool with ARK protocol. And a fellow Bitcoiner decided to step up to the plate and say, hey, why don't I tell everyone and show everyone about what we did with ARK and payments at Riga? So get ready, guys. It's going to be a fun show. You know the deal. We're going to give some love to the Pleb Underground sponsor, and then we're going to get into all the fun. Here we go. Be right back. Pleb Underground is sponsored by Archimedes Emporium. Discover the pinnacle of precision engineering, starting with their Bitcoin logo wall clock, meticulously machined in Maine from a solid block of aerospace-grade aluminum, ensuring unparalleled durability and performance. Experience the difference of a product made without compromise. Head on over to Archimedes Emporium. All right, let's dive into it. So, from yesterday, this is where we're starting. Canadian public company LQWD deployed 19.75 Bitcoin from its treasury on the Lightning Network, generating an effective 24% annualized yield from routing fees. And yes, guys, this is not the garbage of giving your money and then the bank takes it, rehypothecates it, and just hands you virtual dollars in an account, right? With Lightning, you are actually committing your Bitcoin to provide liquidity for transactions. This is good stuff. Like, in all fairness, right? I'm not, you guys know, I'm not a cheerleader for the public companies just buying and hoarding Bitcoin. Of course, to each their own, right? Individuals are buying and hoarding Bitcoin. But this is a good thing, right? Like, this actually shows that, hey, public companies, you can deploy your Bitcoin. You can actually earn something by providing liquidity. So hats off to LQWD. For not just doing the typical dilute my shareholders in order to buy more Bitcoin. It's going to be very interesting, though, that if that 24% yield that they are hoping they're going to receive, I'm very curious to see if they continue to buy Bitcoin with it. Anyways, I like that. That's a good one. That's right. Phil's not always miserable. Anyways, moving on. Here we go. Let's get over to the next story. Satsuma Technology added 22.65 Bitcoin since its last update, bringing its total holdings to 1,148. I guess that's probably why we're having that mini pump today. I'm kidding. That's not why. But yeah, good stuff. They keep adding Bitcoin to their balance sheets. Like I said 1,000 times, very curious to see which businesses will be able to afford to hold Bitcoin. It's fantastic. We can all buy Bitcoin. Who can actually afford to hold it? That's what we're going to find out. Anyways, okay. Moving on. What else do we have in the paper Bitcoin summer? Oh, this Deutsche Bank. So this one, I got to be honest with you guys. I didn't know what to think about this one. Didn't know how to feel. Deutsche Bank's bold move into cryptocurrency, the growing trend of institutional confidence, right? So Deutsche Bank has substantially increased its investment in MicroStrategy shares. So they're buying MSTR, adding 47 million in Q2, its total holdings to 658,000 shares, valued at 220 million. Now, why is it that I don't know what to think about this one. So Deutsche Bank, if you go back and take a look at their history, they've been bailed out quite a few times. Deutsche Bank has a really bad record. And again, I'm not saying that, this definitely means MicroStrategy is going under and all that. That's not what I'm saying at all. I'm just saying they have a really not so good track record. Okay. And they've made some really big mistakes. Not that, people and businesses haven't made mistakes in the past. However, when I see Deutsche Bank buying shares of MSTR, I get this. There's like this voice, not one where I'm insane, but this voice in the back of my mind that says, this is feeling like the growing systemic risk. That's what this feels like. You see, this is kind of what we've talked about. And again, right? I mean, this is par for the course. A superior product, or let's say a product with a lot of hype comes out. A lot of businesses, they want to get exposure to that product, right? And so in some cases, they start to create derivative products based off of it and whatnot. Or in some cases like this, in this particular case, right, you've got this big bank like Deutsche Bank that's buying shares of this company. Now, of course, a lot of people are waiting for the MicroStrategy inclusion into the Standard & Poor's, right, which will only help validate and solidify these types of decisions to say, you see, we've made the right decision buying these shares. This company's now been added to the S&P because, of course, right, there's no company that's ever been added to an index that disappeared, that went under. Yeah, exactly. Obviously, that has happened. But the point is that if the naysayers of MicroStrategy are correct, then this is part of the systemic risk, right? The banks holding shares. Now, again, I might be a hypocrite for this, but I believe that the banks would be better served by actually holding Bitcoin, right? That's just, to me, like, it's like, yeah, take self-custody of your Bitcoin. But instead, they're buying shares of this company, which obviously does not actually really have great revenue from their operations. So this is why I'm a little bit weary about Deutsche Bank. Again, right? Good for them. They're buying MicroStrategy shares. Obviously, I don't want them to go under. I don't want MicroStrategy to collapse or any of those things because, hey, that's going to cause a massive slump in Bitcoin. And I'm biased because I hold Bitcoin. So anyways, yeah. Not so sure about that Deutsche Bank one. Either way, doesn't matter. Let's continue on. We've got more stuff here. This one, I thought it's not really about a particular company, but yeah, BitcoinTreasuries.net, right? They're saying less than 10,000 Bitcoin away from public companies owning 1 million Bitcoin. As I've said before, tongue in cheek, I can't wait for the public companies to have more than 21 million Bitcoin. That's going to be when the fun starts for me. Yeah, I can't wait for that stuff to actually happen. This is where we start to kind of see some red flags. Let's dive into it. So, Metaplanet, Japanese public company, shareholders just approved a plan to raise 3.8 billion to buy more Bitcoin. Now, Metaplanet doesn't have any real debt per se. They are creating a lot of shares, though. There's no question there. Now, although the Bitcoin media outlets are portraying this as, of course, another win. Oh, it's amazing. Look, this company's raising again. They're diluting the shares to buy more Bitcoin. It's great because Bitcoin goes up forever. So we're super happy that they're diluting us because they're buying more Bitcoin and whatever that whole story is. Okay. There's another take that is emerging. And I got to be honest, to see this this early in the cycle kind of it does worry me. It does tell me like, oh, maybe the end is a little sooner than we think for the current cycle. But either way, let's dive into it. Metaplanet's Bitcoin strategy faces fundraising crunch as stock sinks. So you guys know me. I just zoom out to the monthly chart. This is the Meta Planet monthly chart. And the S that you're seeing over here, this was a stock split. Now, this was not a reverse split. This is where they did the normal stock split, right? Where, let's say you have one share, they give you 10, right? So they increased the shares. But yeah, I mean, there's not much history on this thing. Like, let's be honest, right? There's not much history. These are monthly candles. Each one of these candles is monthly price action. I gotta tell you, I'm not seeing a bounce in the near term, but I'm not a full-time trader. I'm not really a trader to begin with at all. I just like looking at charts. I can't help it. But to me, I don't know. I think they're in for a little bit of a bumpy ride. And it looks like I'm not the only one that thinks that. The company's stock has dropped 54% since mid-June, despite Bitcoin gaining around 2%. And it's not just Metaplanet that's seeing this. MicroStrategy, NACA, CEP, SEPO, Coincilium. I mean, guys, I report on this stuff every single day. So at this point, all of this is like a Rolodex of names inside my head. Anyways, the decline has put its capital raising flywheel under stress. But wait a second, Bitcoin goes up forever, and everybody knows that. Shouldn't everyone be excited to just buy shares? A mechanism dependent on rising share prices to unlock funding through warrant issue to Evo Fund, its key investor. Now, with its flywheel strategy losing momentum, Jarovich, who's the CEO of Metaplanet, is turning to alternative fundraising through a public share offering in overseas markets. It kind of seems like he's speeding up the MicroStrategy strategy. Shareholders will vote on Monday, which they already have, on whether to approve the issuance of up to 555 million preferred shares. So we should know what preferred shares means. They're gonna lure people in with the dividend, right? Jarovich called the preferred shares a defensive mechanism allowing capital infusion without diluting common shareholders, right? So that's supposed to make us feel good. If the stock falls further, these shares expected to offer up to 6% annual dividends and initially capped at 25% of the firm's Bitcoin holdings, may appeal to Japanese investors starved for yield. I think he's tapping this a little too early. But I also thought that MicroStrategy was tapping this a little too early. And I believe that companies that do not have rising operating income and are profitable, I believe that they are even less capable of paying this stuff out. But I know I'm stupid, and even as a Bitcoiner, I don't seem to understand that Bitcoin's going up forever. I don't know. I don't know what happened there. But anyways, yeah. So I got to tell you, I wasn't ready to start seeing that type of news so soon, considering this is like the cycle of the Bitcoin treasury companies. So that's, to me, it's a bit of a red flag for those companies. But that's pretty much about that. I don't think that really means anything for Bitcoin, though. Yeah, I get it, right? We're going to see some short-term price fluctuations. People are going to get scared. It's over. Bitcoin's dead. Like the other 999 times, then it comes back to life. Anyways, moving on, we've got some other great news. Hey, what's up, JD? Sorry, I haven't been paying attention much to the chat. I'm trying to do this without getting totally sidetracked, but I love you guys. Let's take a look at the next thing that's happening here. This is a little bit some better news, right? Some better news. UAE's ARK properties to accept Bitcoin and other cryptos for real estate deals. Hey, you know what? People actually using Bitcoin as a medium of exchange. I know that that's not what the suits are touting, but it is adoption. That is a good thing. Okay. I get it's not a whole bunch of, rich people throwing parties and inviting us to their yachts, but this is Bitcoin actually being used, Bitcoin actually being integrated. I'm happy about this. This is good. ARK Properties, one of the largest publicly traded real estate companies in the Ras Al Khaimah Emirate of the United Arab Emirates, will begin accepting payments in Bitcoin, ETH, and Tether, among others. Good for them. Why not? Good for them. But I think, if I'm not mistaken, these rack guys, who's going to be handling this? Who's going to be, okay, so transactions will be handled by HubPay, a global payments platform based in the region. Okay, so centralized processor, no surprises there. I wouldn't expect anything different. I am curious though as to when we actually start to see some of these bigger organizations using using products like BTC Pay Server. It's quite possible they are. Some of these bigger players are using BTC Pay Server in the background to handle Bitcoin payments and whatnot. They're just not advertising it. But I am curious. I am curious to see that. Okay, we are going to move on over to the ARK story. So, okay. Got to give a shout out to this guy over here. All right, this guy over here, Marius, Off-Chain Media. I got to get with him and find out what he's doing right that I'm doing wrong. 211 subscribers with one video. I need to learn from this guy. Anyways, he did an awesome video, a really cool collage about what took place at Riga, and we are going to be looking at that. But first, we're gonna tease it, right? Because it just wouldn't be fun without the tease. So yeah, he made this awesome video, Marius. I put a link to his show in the show notes if you guys want to go check out his channel as well. Let's dive into ARK. Right? We thought we were paying with Lightning at the Baltic Honey Badger conference, but it was actually the mainnet rollout of Arcade. Uh-oh. Here's what just happened in Riga and why it changes everything for Bitcoin. I'm already psyched. ARK is not a Lightning replacement. This isn't about competing with Lightning. It's about expanding Bitcoin's universe. And I can appreciate this framing. It makes sense to me. Lightning, payment network. Arcade, programmable Bitcoin operating system. They work together to unlock Bitcoin's full potential. Now, Arcade, I feel as though, and again, it might be my lack of understanding, which is why I'm comparing the two, but I feel as though this kind of would be doing competition against something like BitVM, which also seems to offer maybe a similar but not a same type of model. Either way, we're going to watch a very short video about Marius, essentially, well, not just Marius, but a few other people as well at the Riga conference explaining what their payments experience was like with ARK. So here we go.
I mean, very close to many. I think I paid for coffee using Arcade.
There you go. A little Easter egg, like this entire conference, all the payments happening are actually running on ARK right now.
Like, I think Giacomo was mentioning to me that they're actually using ARK now, even for the merchants here. So,
oh, you didn't know either?
Yeah, I didn't know that until he told me, and then I was like, oh, yeah, actually they're doing ARK in the background.
A coffee and a cappuccino with Arcade. Let's see if it works. We work it out. I have my cappuccino and my coffee here. Super happy. First time for me.
Nice.
That's Marius.
All they're Lightning enabled, so you don't even know it, but everything is being powered by ARK.
When I spoke with Roxy about the Baltic Honey Badger conference, he mentioned something that immediately caught my attention. For the very first time, the ARK protocol would be installed on mainnet. ARK is designed to complement the Lightning network. While Lightning focuses on making cheap transactions, ARK could make self-custody of Bitcoin much simpler and more practical.
Definitely did a better job explaining it than I could. That's for sure. So I'm excited. I'm excited to see this. I'm excited to see what happens with it. I mean, look, at the end of the day, we are going to see a lot of ideas that don't work. And unfortunately, we do need to explore those things, right? We need to have a good idea of all the things that do not work. And that way we can really focus on the things that do work. And it looks like, I mean, look, I started hearing about Arcade maybe, I don't know if it seems like 2 years ago, maybe a year and a half ago. I did not quite understand it at all. But that's how I feel about a lot of these things, right? This is always my first impression. It was the same thing with BitVM. And, there's something to be said with the multiple interactions with a specific technology before you start to feel comfortable with it. I can honestly say that I had to hear about Bitcoin probably 5 to 7 times before I really started to take it seriously, and before I even began to start thinking that I could understand it in some way. And when I look at these types of things like BitVM, and even when I was first introduced to Lightning, even though I didn't quite get it right away, I just kept reading about it and I kept watching content about it. And then eventually it clicked. So, you know what? I'm happy to see what Arcade is doing. The idea that we are going to have this silver bullet. I remember when Lightning started to gain traction, and there were so many people. And again, right, there's nothing wrong with cheering for something that you like using for a superior user experience. But the thing is that it's not a silver bullet, right? There's going to be multiple solutions, and we're going to explore them. Like there's nothing wrong with that. So yeah, Lightning is great for this one thing, but Lightning is not the end all that saves everything, right? If you take a look at the current financial system, right, the problem isn't the layers. The problem isn't credit cards and stuff like that. The problem is the infinite money printing. The problem is the people who can create debt out of thin air and rehypothecate and do all kinds of shenanigans. That's the issue. Layers, complementary networks, varying degrees of trust with third parties that you can actively choose to trust or not. That's all part of a financial ecosystem. Anyways, all right, guys, that's all I wanted to talk about today. That's going to do it for the Daily Live show. You know the deal. I'm going to see you guys tomorrow. Thank you so much for joining me. Peace.